So welcome back to my channel, guys. Welcome back. This is King Duby right here. So um after this particular video, for those of you who do not have mentors or don't have the money to um afford mentorship or get professional course, this is a guide at which you can work your way towards profitability. Now let me tell you one thing. The thing is this: learning from YouTube is you have to be strategic from learning from YouTube. If you just go on into YouTube, search just any channel, learn from here, you become unprofitable for a long time. So you have to learn how to do the right things, get the right information on what to learn first, what to learn next, and everything in a detailed form. So this video is going to be of great help. So let's get right in. So first things first, if you are trying to build your own strategy, you have to know that it's going to take you time. Now, it's normal for humans to underestimate the toughness of trading. You see people on Instagram, on YouTube, posting flashy lifestyle. You think you can easily do it. Maybe because you were smart in school, you easily learn things fast. Trading is difficult. Trading is different. The market is completely above every trader. So ask yourself, if it's above every trader that's ever lived, why do you think you be smarter than the market or you override the market? So the market is our greatest alpha, and we must make sure we remain students in the game. So you will encounter difficulties, but let me tell you the truth. If you keep pressing and keep being consistent, very soon those things that seem as difficult for you, with time will become very easy for you. Okay, so if you're building a strategy, that's the first thing: the mental state, to know that it's going to be difficult, it's going to be stressful, it's going to make you have self-doubt, it's going to make you think you are the worst person living or you're dumb. But you that you're not. It's just your brain getting to adapt to the new things of building a strategy. So now, when it comes to building a strategy, the first thing I've talked about is psychology, which I'm going to write here. I'm going to write here. I think I'll use something like a bullet. Mental preparation for pain. You have to know it's going to be hard. Second is you have to understand the basics in forex. So that's learning candlesticks. Understanding the meaning of pips, understanding how to use trading platforms like TradingView, understand how to use all these, platform like MT5, and understand what long means, short means. So you can get those ones on babypips.com. So you can go to babypips.com, okay, babypips.com, and read the basic of forex. Just read the basics of forex. So I'll just to read basics on babypips.com. Now, I'm recommending you babypips.com because during my time, that's what I used. But you can decide to learn on YouTube. There's channels too, like, yeah, the channels too that will teach you basics. I can't remember anymore, but there are channels on YouTube that will teach you basics. Okay, so you can go and search uh, complete beginner guide to learning forex on YouTube if you don't want to use baby pips, because baby pips is going to be more like written content, not going to be videos, right? So now the next step is the things most people watching this video must have been done with the baby pips part. So if you're done with the baby pips part, you know the basics, you're gonna move to the next step, which is the third step, which is choosing a framework to work with, a system or a framework. What's that? Now, technical analysis, we all know, is the act of using historical past data on the charts to predict future price moves. So the way the chart behaves before, that's how they used to, read the market in present. Now, why is it this way? Is because the market keeps doing the same thing over and over again. It's repetitive. So now it's repetitive doesn't mean it's 100% repetitive, but most things repeat over and over again. So there are many different frameworks, there are many different strategies. Okay, so I'm gonna write choose a, a technical system to work with. So Truth is that there are many technical systems. There is smart money concept, there's ICT, and there is also support and resistance trading. So the three of them are going is like they're the same thing. What I mean they're the same thing. They also still do the same kind of thing, but they have different terminologies and different orientation. So the ICT has different orientation, the SMC has different orientation, and support and resistance strategy has different orientation. I'll advise you choose one and not mix two. Okay, now if you want to use the ICT, you go to this channel and learn how to use the ICT. If you want to use smart money concept, this channel is okay for you. You can check Phantom Trading channel and the rest of them. But now let's act like you want to choose the smart money concept, but that's what I do. Now, when you have chosen that, now assuming you chose smart money concept, what's the first thing you're going to learn? You're going to learn market structure. Now, there are three parts of the system. Okay, we have okay, choose. Okay, this is the fourth one. Understanding how to predict market direction for every given day. So this is the first thing you're going to learn. Now, in three of those system I mentioned, like the ICT, you're going to be using internal range liquidity and external range liquidity to learn that. For SMC, you're going to be using market structure, higher highs and higher lows, internal structures, external structures, and fractal structures. And there's a video on this channel on market structure, understanding market structure. Check in this channel, you see it's going to teach you in depthly on how to trade market structure properly. Now, this framework would help you know where the market is pointing to. Now, this fourth step alone will give you all the stress on earth because right here is this the reason why I said the first step in this is mental preparation for pain. You have to be aware that pain is coming. You have to be aware it's not going to be easy. You have to be aware that no matter how smart you are outside trading, this will humble you. So, because it's something new, your brain has to adapt to. You'd have doubts. You want it to be easy. You want to do it in your own way. But the thing is, you have to learn that framework. That's why I said choose a technical system to work with. You need to follow one. If you're learning one, stick to all the rules. It might be hard to grasp, but take your time. Give yourself few hours of study every day, not the whole day, so that you can take your time to grasp slowly, slowly, slowly. So you're going to learn market structure properly. Market structure will enable you know where the market is heading to. If you can understand market structure 80 to 100%, then you can start learning other things like other blocks and the rest. Okay, learning. Okay, I was learning how to draw UI on the charts. So the reason why now we are in the fifth step. Why before I recommended the fifth step, the reason I recommended you to the second step, read basics and baby tips, is that you must know how to use your trading view tools, your rectangle, your lines and everything to be able to draw. It's very important. So if you skip any of these steps, you have issues. But if you already know how to use trading, you how to draw the lines and everything, then good. Learn how to draw POI, which was POI, point of interest. So when you know market direction, you need to trade off certain point of interest. Okay, those point of interest are areas in the market whereby there's a high chance that if you place an order in those points in the market or those prices in the market, price has a high chance of going in your intended direction. Remember, the first step is what? Market direction. The second step is what? Learning how and understanding point of interest and learning how to draw them. So in SMC we have fair value gaps, we have um, other blocks, we have liquidity sweeps, there are other things like breakout blocks and the rest of them. But I choose to use these three: fair value gaps, order blocks and liquidity sweep. If I'm intending the market to go up, I need bullish order blocks, sell side liquidity sweeps, or bullish FVGs that price can get into for me to look to go long or to buy. I don't just see that the market is going up and just start buying just anywhere. There are areas that are very high of high orders in there, and institutions are dumping orders. You want to buy with the institutions, okay? So you have to learn how to draw these POIs, and to learn it, there are countless videos on how to draw FVG order blocks on this channel. Go and watch them. They could be old, but they are very useful. Okay, or you can search on YouTube or anywhere how to draw this. It's going to be very helpful to you. So the sixth step is before I forget, before you move to the learning how to draw POI on chart, you must understand that after learning how to predict market direction, which is um learning the how to draw market structure, you cannot just learn how to predict market direction just like that. You learn how to draw market structure first. You have to learn how to draw it on all the time frames in a particular pair, then do the same thing and be accurate in all the pairs. So you try and fail, you try and fail, you try and fail, you keep trying. And that's why you need a mentor after all, because you need somebody to verify if you do what you're doing. But if you don't have a mentor, you do the wrong things and go ahead the next step and then get stuck at the last steps. And then you come back again to the third step. That's why I do tell people you need a mentor. So even if right now you have a mentor, you know who to learn the basics from, you know to whose system to adopt, IDO SMC, you know the kind of market structure, how I draw mine, you draw yours like that, you make a mistake, you send it to me, I verify it. That's what I do to my students. I verify it, I correct them, and they correct themselves. And leading them. And they have to do it on all the pairs we trade permanently. So they don't have to do it over and over again from the monthly chart, weekly, daily, 4 hour, 15 minutes, just like that. I have to keep all the lines, everything intact before they go ahead and start learning how to draw POI on the chart. Okay. So the next step is learning an entry model. Learning or adopting an entry model. So learning or adopting an entry model is that there are different kind of entry models in SMT. Okay, there are different kind of entry models. There's stop point, return and break of structure, return to order block, AMG, total shoot, different kind of entry models. So you have to adopt the one your mentor is using or learn one of them on YouTube. Now the idea of trading is this: you know the market direction, you trade off a high area, which is the point of interest, if I area you draw that part and you're watching what's going on. You go on the smaller time frames to watch what's going on in that box. That's your point of interest. Now, inside there, what's going on in the smaller time frame is the entry model forming. It has to form perfectly the way you were taught. It's just like the ICT training mentorship model. Yeah, it has to form in a certain way. So when you form in a certain way, then you need to enter your trade, and then you have to learn trade management, which is the next. Learn trade management. Okay, so you can even learn both alongside adopting the entry model and learning trade management. Because when you take your trade, you need a certain way, a certain place to see your stop loss, and a certain exit point if you're correct. You must know where to go if you're correct. And when price gets there, you want to be out with your profit. Now, this is all you need. So when you know these things, your duty is to go study them on the chart. You first of all practice to know the market structure, then you practice to draw the POIs rightly, then you also practice to know how to take an entry model. Just practice. Now you go to study how these things play out in the past. You want to see it play out and see where it gets confusing and see where you don't understand and report back to your mentor or report back who is looking after you, right? And he will tell you, okay, this did not work in certain dates in last year or 2 years because this was not in place, this was not in place. You get this information from him, you journal it, you write everything down. And what guess what? You take note of that, keep studying, keep studying. Now you study to the extent you know this system well, everything combined. So you have to start forward testing. You have your demo account and then you start forward testing, risking properly, you know, That's where the trade management comes in. Risk management rather. Because when it comes to forward testing, it's not because you're forward testing, you start facing just any loss as in a demo. No, you have to follow strict risk management because you're trying to test the stats and everything. So you for testing, you make mistakes. You make mistakes over and over again. You enter the wrong trade over and over again. Now you're bound to do this. That's why I don't recommend you try to fund a live account or buy a profit now because you surely blow it. So no matter how smart you are in any field in life, you will still blow your account. That's how brutal the market is. So you need to be very, very careful, very extremely careful trading for a test on a demo account so that if you lose, you know it's demo. But you don't trade recklessly. You want to make sure you take only trades that match with the plan. Now, every trade you journal it on Notion, every trade you journal it, have a screenshot, time of entry, time of exit, how many are loss, how many are win, everything put it in check. Now, why is this so? So that you can able at the end of the week evaluate your journal, check all your losses and see what's common amongst them, eliminate. Your duty is to keep optimizing your strategy, optimizing it till you have removed a lot of garbage. Just keep removing, keep removing, keep removing till you are excellent. Okay, till you are excellent in executing. You're not going to be adding, you're going to be subtracting all the garbage you do, all the wrong setups that are low probability. Keep till you're good. Now, when you're good, you cannot get a profit, not even a live account, a profit because you want to purchase it a smaller amount of money and make more profit from it that you can put in your live account. A particular trade on USD card from the find out the market direction, also find out the point of interest to work with, and I also got in my entry model, also managed to trade at the right time. I got out. So let's go right into the charts. All right, so this was Tuesday, 21st March last week. As at the time I was making this video, that was last week to this date. So you can see this trade 2 hour. Now I would have rolled this trade up here, which would have given me how many hours? So I would have rolled this trade up here, would have given me almost, let's see, almost 11 hours. But I don't trade that way, okay? I'm okay with just small because I don't like to hold trades more than just a day, okay? I'm okay with just small I can get. So this is the daily chart and that was this day Thursday 21st. So what happened was simple. As you can see price is going up, okay, down, up, retrace, creating new highs, retrace, now we create new highs. Okay. For those of you that have watched my market structure video, that's a fractal structure. The big picture of this my daily time frame is pretty large. Okay, that's the external picture is pretty large. So you have to understand where I am. I'm having a very poor network, so you guys have to just manage. So this is the fractal structures is going up. Literally is still trying to retrace to this fractal structure premium position I get. Okay, it's already in premium, but maybe it's coming for these other blocks or so, but it has to follow an uptrend, which you have to ride because this is the daily chart. Every candle of the day matters. So right now an uptrend is active and we're feeling it, okay? So we created this high, pull back around this liquidity. Around the liquidity, like we are going up. Yes, so we went up, okay? Now we have to pull back. Now the only PR is when we are pulling back, we have fair value gap here. I know that if this fair value gap does not hold, this other block is not going to hold. Is this liquidity that hold? Why? Because when price uses weak as a breaker structure, the POIs that hold will either be FVG or sell side liquidity. In most cases, not other blocks. Why is not other blocks? Because it did not close the body. So here cannot be classified as other block yet. If it close the body, then here is an other block. It's not. So it will literally run here as a sell side liquidity. So this run on the 4 hours. On the 4 hour, this same run is showing up here. So the run happened smoothly here. Well, as it happened, we are supposed to look for a trade here. This is Thursday, so it's supposed to be a buy trade. Meanwhile, that bullish structure the day there is internal structure. There it was fractal. Here's internal bullish structure. You can see here. But the Fractal structures on 1 hour is bearish. That it we just created this low. Okay, we just created this low. I see now very low, and we broke through the low. So you can see we are in a bearish fractal structure. Remember on the daily I told you the direction. I knew where we're going to go up from. So let me go back to the daily and explain something for you, because we are following the sequence: direction, area of value, which is the point of interest, then entry model, and trade management. These are that's the standard. That's what you have to do first. So pardon my network issues. Pardon it, please. So you see, what's happening here is this. I know we are going uptrend, so we have to look for buys at least. Now we are in the discount. Okay, if you draw a flip from this low to this high, this I'm dealing with this swing. We are in the discount area, so you know direction is uptrend. We're going up, right? And then secondly, area of concentration, area of value, point of interest, they're all the same. Is this low? Sensor liquidity. So it's an important place that can lead price to that intended direction. I said it when I was explaining everything. I said it. So on the 4 hours, I want to see the same thing sweep on the 4 hours, not closing below. Let's also be a sweep, and that was confirmed. I want to see the same thing on the 1 hour, not closing below, but sweep too. If once one of the time frames fails to follow the same routine, I'm backing off. I'm backing off. So as you can see, it's also a sweep too. Now let's go to the 15 minutes. As you can see, now let's see how the 15 minutes is doing. Okay, inside 15 minutes, I'm going to open it. You find out that it's also a sweep on the 15. Can you see? It's also a sweep, so it's very very legit. Now we're going to talk about entry models. Now I have two entry models. The first one is the 15 minutes. I even have three. The first one is on the 15 minutes. The price breaks above here, which is a chalk, which is a chalk. Hope is green. Yes, the price breaks above. I need price breaks and close above. I need price to return back to 50% of this. Then I buy and go up. Now that's one. Second entry model is this. If price creates a chalk on the 15 and on the 1 hour, that chalk leads to an engulfing candle, meaning if this 1 hour candle that caused the chop on the 15 engulfs the previous candle, it means I'm entering right here. That's that's entry model 2. So entry model 1, 15 minutes chart. Entry model 2 is on 1 hour chart if it closes engulfing. Because if it does like this, in most cases, it's not going to pull back on the 15. I have to join like this. Then on the 5 minutes, I have another entry model whereby on the 5 minutes, the same thing I do on 15 minutes gives a chalk return back to 50% of the swing. That's 5 minutes. And now, do I use 5 minutes every time? No, I use it on only GJ because GJ is very volatile. I don't use it on USD card, I don't use it on GU, I don't use it on Euro USD. On Euro USD, I use either the 1 hour entry model or the 15 minutes entry model. That's what I use. It's very mechanical and I don't tweak it. It must be the same. Now, note that if you're using any of these entry models on 15 based on the chalk and return back, make sure it has an FVG form. If you're doing the same thing on 5 minutes, yes, also make sure it has an FVG. Now, if your 15 doesn't have an FVG, I want to use 15 minutes chalk, it doesn't have an FVG, but it created a chalk, you can keep the 5 minutes to check if it has an FVG. If it does, fine. Now, if you're taking your trade, it's just 50% of that swing, not at the FVG, because price might not get there, or price might get there and get lower. But just follow the instruction. There's a reason why it's that way. So I am exiting exactly at the next 15 minutes high. That is very obvious. That's where you must exit in this kind of setup. I have another kind of setup, but this setup is called I call my chalk type 2. Okay, I mean my chalk type 2 based on the POI I'm trading from on the higher time frame. This is how I do it. So if I'm taking a trade like this, I want to exit very early and get out. Why am I doing like that? Why do I want to exit very early and get out? It's because on the 4 hour there's an active downtrend, and I don't know if the downtrend will resume and crush me. So I have to be careful. This is the active downtrend. This is it. This down move. The fractal has flipped. It's bearish. So it could just go inside this FG and then drop against me. So you have to take a profit and leave. Okay, today was when you could, like yesterday was when you could take a buy and hold it to the other hand. And this trade was also one of the good trades yesterday, but I did not enter because it formed when my session was over. So this is exactly how to make use of all the parameters. This is just an example. There are multiple examples to see on this channel. So do well to like the video, subscribe, and this exactly are all the things you need to get good in trading. Get yourself in order. Don't miss any step. And if you're not good at any step, revisit it till you're perfect. You have to be perfect 100% in all, even till trade management.